Kathy. How are you?
I'm great, Hutch. How are you doing?
Wonderful, wonderful. Thank you. I want to start by asking how you like working in Florida versus New York City, and how's your life down there?
Well, thanks. COVID was a very difficult time, but because of COVID, we learned that we could work in a hybrid way, distributed. And we think more of the world is going distributed, just like blockchain technology. So when we decided to make the move, we wanted to go to a place where we thought we could make a big difference. And St. Petersburg is so excited about Ark and the innovation that we're going to bring to the city. And we do feel like St. Pete is going to be the next Austin, Texas, where South by Southwest is. So hopefully sometime in the future, we will bring South by Southeast here and introduce the world to new technologies that are going to change their lives, their children's lives, their grandchildren's lives. So the city is very excited to have us here. And we are filled with gratitude for the welcome reception we have received here.
Can you please update about your research team in terms of staff and how your research is conducted in the new environment?
Yes, well, our research process has not changed at all. So our top-down research, which is really centered around Wright's law, which is a relative of Moore's law, that has not changed. We are focused on figuring out when the cost of new technologies drop low enough so that they have a chance, these new technologies, of moving into mass market acceptance. And if anything, what has happened during the last 2 years, almost 3 years now, since the beginning of COVID, many people are understanding that we have many more problems now. We know that the genomic revolution helped solve some of the problems, the healthcare problems in coming out of COVID. But now we've had supply chain issues, bottlenecks, and we've also had a war, Russia invading Ukraine. So many more problems, and we believe innovation solves problems. And many people have in our industry have said, oh, well, Ark's strategy was good for COVID and they were lucky, but we do not believe that. We believe our technologies, our platforms, our 5 platforms are going to solve more and more problems and become more and more relevant. So we have not changed our top-down analysis, our bottom-up analysis, or our scoring system. However, we have introduced new growth paths for our analysts who have been with us for so long. So we've introduced directors of research for each of the big verticals. And Brett Winton, who was our director of research, has become our chief futurist.
Okay, what is the chief futurist?
Yes. Well, one of the things we've discovered over the last few years is that the 14 different technologies that are involved in our 5 innovation platforms are converging. They're converging so that one S-curve is feeding another S-curve, is feeding another S-curve. And so Brett's responsibility now is to make sure that we understand how these S-curves are feeding each other and understand how explosive the growth opportunities are going to be. So to give you 2 examples, first, the genomic revolution. That is the convergence of genomic sequencing, so DNA, RNA, and protein sequencing, converging with artificial intelligence, converging with gene editing. And that convergence, we believe, is going to cure disease. And we're getting evidence that that is happening already. And then the second example is autonomous taxi platforms. So that involves 3 of our major platforms. Robotics, autonomous vehicles are robots. Energy storage, they will be electric. And artificial intelligence, they will be powered by artificial intelligence. And we have first proof of concept, Cruise Automation, which is a division of GM, has launched autonomous driving in San Francisco. Tesla is going to launch nationwide when it does. And it is because of these 3 platforms, each S-curve feeding the other S-curve. And most people don't believe this. They are very short-term oriented, or they're looking backwards. They're investing close to their benchmarks, which is all about what has happened historically and what companies are successful because of what has happened historically. We believe, as we look to the future, these innovation platforms are going to converge. These technologies are going to converge, cause explosive growth opportunities. And Brett's responsibility now is to pull us all together to understand how profound the ramifications are.
I want to come back to Tesla later on, but now, as ARK Invest, you have been focusing exclusively on innovation themes well before COVID. How are you evaluating the sharp rise in innovation stocks during COVID and the significant decline that followed?
Yes, what happened there is the market began to understand during COVID how important innovation was going to be. And there was so much excitement about innovation from the bottom of the market during COVID in April of 2020 to February of 2021. Our flagship strategy went up 360%. That was investors beginning to understand something is happening here. And then what happened was, as people got vaccinated and went back to work, and we saw supply-demand imbalances, supply chain bottlenecks, the fear of rising inflation and rising interest rates hurt stocks that were long duration or focused on the future, 5 years from now. And the fears, we think, went out of control, because what we are seeing now is evidence of deflation. We're seeing iron ore prices falling 60%, lumber down 60%, the Baltic Freight Index, which measures supply chain issues, down 79%, copper down 35%, even oil down 35%. There is real deflation in the pipeline. So those who are still worrying about inflation and who have been punishing our stocks and staying away from our stocks are going to have to turn around and say, wait a minute, if inflation is not a problem, then interest rates are not going to be a problem. And the innovation stocks that have been punished so dramatically in the last 18 months should turn around. So what we think is that COVID and the rebound from COVID is a foretaste, a signal, a sign of what is going to happen now that inflation is not going to be considered a problem. So we believe that what happened in 2020 for our strategies was a foreshadowing of what is going to happen during the next 5 years if we are correct that inflation is coming down dramatically and interest rates will follow.
So when do you expect that inflation to come down and interest rate to fall?
So if you look at the inflation index that the Fed has relied on historically, it's called the PCE deflator, core, take out food and energy, core PCE deflator. That peaked in February at 5.3% in the United States, is now down to 4.6%. And we believe in the next year could drop below 3% and maybe even faster than that. And we believe the Fed will take note because it's very clear that the pipeline of deflation is filling. I just gave you some examples. And to the extent the Fed continues to raise interest rates, those prices will drop even faster. So we believe within the next 3 to 6 months that investors will be reassured that inflation is not the problem, that the Fed will be reassured that it should not keep raising interest rates, and in fact, that it probably should be thinking about dropping interest rates.
Mm-hmm. Why do you think, you just explained this PCE deflator indicator has peaked back in February. Why do you think investors are not paying attention to that fact?
I think because of what the Fed is saying. So if we look at what Chairman Powell said in his Jackson Hole speech, it was an 8-minute speech, and he made 4 references to Fed Chairman Volcker. Fed Chairman Volcker is known for conquering inflation in the early 80s. And there were 2, he made reference to Chairman Volcker 2 times by name, but 2 other times indirectly. He used the phrase keeping at it or keep at it. And that was Chairman Volcker's, the title of Chairman Volcker's book describing the period in the late 70s and early 80s. And so what that told us and the markets is the Fed believes that this inflation problem is as bad as the one in the 70s and the early 80s. But if you think about the differences, the inflation in the 70s and early 80s was in process for 15 years. It started with the Vietnam War and Great Society, all the new social programs in the US in 1964. So it was 15 years in the making before Chairman Volcker got his position. This problem has been 15 months in the making before the Fed reacted to it. There's a big difference between 15 years fighting inflation that had been brewing and building for 15 years and today's inflation, which had been brewing and building for only 15 months because of COVID and supply chain problems. We believe that the Fed in the next 3 to 6 months is going to signal that it understands that this inflation is not like the inflation back in the 70s. However, the Jackson Hole statement did not say that. The Jackson Hole statement said, we believe we are fighting an inflation like the inflation the Fed Chairman Volcker was fighting. And we will find, and we believe that the Fed will turn around and say, wait a minute, we were wrong. And inflation's coming down a lot faster than we expected. It's interesting. In recent days, 2 people, Elon Musk at Tesla and Jeff Gundlach, who's one of the most famous bond investors in the world, both of them have started talking about deflation. And I have contributed to the conversation on Twitter. And I have contributed the price declines that I just described to you to help everyone understand that the greater risk out there today is not inflation, but deflation. And so I think the market's going to turn around and reward stocks and companies that are growing and are not hostage to inflation or benefited by inflation and the economic cycle. Our companies are secular growth companies. And as fears of recession and deflation increase, the beneficiaries should be our stocks.
Kathy, you have a investment time horizon of 5 years. What is your outlook for the next 5 years? How would your innovation theme stock would trade over the next 5 years?
Well, it's interesting. When our flagship strategy increased 360% from April of 20 to February of 21. And at that point in February of 21, based on our estimates for the next 5 years, we projected that our flagship portfolio would deliver a compound annual rate of return of 15%. Now, 15% is our minimum hurdle rate of return, minimum. And so we were thinking, okay, we need to, everyone needs to keep some powder dry. And we never dreamed that the correction would take 18 months. But today, if you look at our 5-year investment return projections, they are multiples of that 15%. And that's multiples of 15% per year. So in other words, what we are saying is the rubber band has stretched and is waiting for the Fed pivot. And when we get the Fed pivot, those returns, we believe, will begin to be realized.
I know you don't focus on the overall stock market. Having said that, I'm curious to know what you're thinking about the overall stock market outlook for, say, next 12 months-ish.
Yes, I think that the stock market has spent the last 18 months worried about inflation and interest rates going higher and higher. And I think that sentiment is going to change. So I think that the stock market is going to be a very productive place to invest during the next 1 year, 3 years, 5 years. Now, I also think that the bond market will be experiencing two things. One, the risk-free interest rates should come down. But if we're right and innovation solves problems and innovation gains traction during difficult times like we've just been through, then what that means is that some of the stocks in traditional benchmarks are probably going to be disrupted, or their companies are going to be disrupted and disintermediated because innovation is now moving faster. If you think about global digitalization, COVID accelerated that. And with the new hybrid work world, certainly that's the case here in the United States, the companies that help this global digitalization are going to continue to thrive. And yet their stocks have been hit very, very hard during the last 18 months. So we think that's going to change around and fairly dramatically. The bearish sentiment in the stock market these days is so high that whenever I see the bearish sentiment this high, I know that the odds are also high that they are wrong and that we are about to have a recovery in the equity markets.
Well, since I'm interviewing the Kathy Wood, I have to ask about your update on Tesla. Your current Tesla expected value is pre-split $4,600, a post-split of roughly $1,500 for 2026. You are assuming 60% of that is of expected value, and more than half of expected EBITDA is Robotaxi, which you mentioned at the beginning of the conversation.
Yes.
I'm thinking it's maybe a little too early for Robotaxi to play out. Can you please explain how you're thinking when that Robotaxi may start rolling out and how that would affect the stock price?
Yes, it's been very interesting to be studying artificial intelligence in the last 18 months. We have been shocked at the progress. It's much faster than even we at Ark, and we're out there pushing the envelope, really making long-term projections, and the projections we're making are happening much sooner, 5 to 10 years sooner. And so we believe that Elon Musk's projection that we will have robo-taxis in the next few years is right. Now, we know that Elon Musk has been saying that for the last 3 or 4 years. And so most people don't believe this anymore. But we have been watching the breakthroughs in artificial intelligence and have been astonished. So our conviction that Tesla's AI chip and AI expertise and its data, it has more than 2 million robots out in the world today collecting data to feed this AI engine with corner cases. One of those robots is my Model 3. I actually also have a Model Y. So I have 2 robots who are helping Tesla right now figure out all the roads around Connecticut and Florida. And there are 2 million around the world that are helping Tesla figure out the roads here in the United States and even in places in the rest of the world. And so we believe that today, robo-taxis, if all we had were robo-taxis, that we would save human lives. 80 to 90% of the fatalities in auto accidents are because of human error. And so even today, if we were just to say, no more human drivers, just autonomous, even though it's not perfect, we would save lives. We would save lives. But we do know that the transportation safety associations in different parts of the world are very, very risk averse. And so they will want to see more proof, and we think they will get it. And so we do believe that consumers will be delighted within the next 2 to 3 years with robo-taxis.
And that rollout would be nationwide or city by city?
Yeah, no. So for Tesla, it will be nationwide. Of course, they'll have to go city by city, but they'll be able to do it very quickly. Whereas it appears that Waymo, so Alphabet's Waymo, and GM Cruise Automation, they're going city by city. In fact, just recently, Cruise Automation said that it is going to be moving into Texas and Arizona, as well as San Francisco. Well, Arizona is where Waymo is, but it's still they have very few pilot cars, and they're collecting much less data than Tesla is. So we believe that the company with the largest pool of data, with the best AI expertise, and with the best domain expertise in terms of transportation is going to be the winner. And we think that in the United States, that will be Tesla.
In terms of autonomous driving technology, who is behind Tesla and how many years behind Tesla?
Yes, I think, well, in the United States, as I mentioned, we think Cruise Automation is more advanced than Waymo. Interestingly, Waymo was the first company, but cruise automation under Mary Barra, CEO Mary Barra from GM, is pushing tremendous resources behind cruise automation. So the founder of cruise automation is very empowered to go out and make autonomous happen. And of course, we read about the difficulties in San Francisco, but if you look at the successes, they're quite significant, quite significant. So we think GM and cruise automation are close. We also think some of the autonomous truck providers are in a good position. Rivian, which is the smaller van-like trucks, partnered with Amazon, is, we think, in a good position. And TuSimple, which we've been very impressed with TuSimple's autonomous truck strategy. And in fact, we've seen Tesla adopt some of TuSimple's strategies. So that has increased our confidence in TuSimple as an autonomous truck winner. In the rest of the world, of course, especially China is moving quickly. XPeng is emulating Tesla. We shall see if that works. NIO is also moving, and BYD. And we do know that China wants a local champion. So we shall see. And then Europe and Japan, again, they will have their local champions, probably partnered with some of these other companies.
What would you say is a risk for Tesla until 2026?
Well, even if we did not assume that autonomous was going to take off, we feel that Tesla, and the reason it's the largest position in many of our strategies, that Tesla is at the leading edge of the consumer preference shift towards electric vehicles. And we believe electric vehicle sales, the units, will go from 4.8 million last year to 40 million in 2026. And that Tesla is by far the company who understands how to build factories, automated factories, that are going to scale its production of electric vehicles. We think it's the most advanced company in the world. And even on that basis, just electric vehicles, we believe Tesla would deliver that our minimum hurdle compound annual rate of return, and that is 15% at a compound annual rate.
Can you please give us efficiency of a gigafactory versus other factories of, say, GM or whoever in the US?
Yes, it's been astonishing to us to watch Tesla, in Shanghai, move to 500,000 units. It opened the factory after breaking ground after just 1 year, and it scaled to 500,000 units within the first year, maybe a little bit more than the first year. And now we believe it could take that factory in Shanghai to almost 1 million units. And same with Fremont in California, which is the oldest plant. It is surprising us in terms of the number of cars it is able to produce, the increase each year it's able to produce because of the manufacturing efficiencies, automation, artificial intelligence being brought into manufacturing in the United States. And we know that Texas and Berlin are going to be much more productive than Fremont. Elon Musk has described his task or his reason for being right now as a manufacturer of factories, the most efficient factories in the world. And because there's going to be a lot more onshoring from China especially to the rest of the world. We think that he is going to bring state-of-the-art manufacturing back to countries that have lost a lot of their industrial infrastructure. And so we think this is a wonderful way to rebalance the world kind of equilibrium, the ecosystem between China, which was beginning to dominate, and now bringing back state-of-the-art to countries who feel like they need to minimize their risks and bring production closer to their end consumers.
How would you expect the synergies that might be created by SpaceX to help Tesla in the future?
Well, we do know that there is a talent exchange between Tesla and SpaceX. These are the best engineers in the world, and they want to work on the most difficult and progressive problems. When I mean by progressive, what problem can I, as an engineer, solve that will change, that will improve the lot of mankind? So there's a talent exchange, and we think they help each other. And we also know that there is an exchange of information and knowledge about materials. Material science is becoming extremely important. So here we have two of the most progressive companies in the world, one more focused on land and one more focused on space, exchanging information about material science and also helping each other understand what can be done in space that cannot be done on Earth, and vice versa. And then maybe one of the most interesting dynamics here is the controversy over LiDAR. So as you may know, Tesla really doesn't use LiDAR in its autonomous vehicles, the ones that are going to be commercial, whereas SpaceX uses LiDAR heavily to connect to the space station, the International Space Station. And so that exchange of knowledge of when LiDAR is going to be useful and when it's not going to be useful, I think has helped give Tesla and SpaceX competitive advantages that if they didn't have each other, they wouldn't understand.
Interesting. Okay. The following questions are from my Twitter followers for you.
Okay.
You have experienced a huge devaluation of your innovation assets. As a chief investment officer of Ark Invest, how do you manage to endure the pain? How do you overcome obstacles mentally and physically? How are you able to stay calm? Can you please give some advice to those who own innovation stocks who are unable to sleep at night?
Oh, yes. Well, I think the most important reason I am able to sleep at night, and I feel really good about what we're doing, is our research. We are doing research that I do not believe anyone else is doing. It's first principles research. And because others are not doing this research, they don't understand how profound these growth trajectories are going to be. And so the courage of my conviction, our conviction, is our research. And I will say we've been so gratified in the last year and a half. We know it's been so hard, but our clients have taken us at our word. We have a 5-year investment time horizon. And if we are right in our research, our portfolios are going to deliver returns that are far superior to the market. And the reason we know they believe us, or most of them believe us, is we have been getting inflows. Our strategies, in many other strategies, if they had experienced a down round as severe as ours, their outflows would have taken their funds down dramatically. What has taken our funds down dramatically is the performance associated with the fears of inflation and interest rates. So that is why, with my macroeconomic experience, that I was educated by Art Laffer, who's a very well-known economist, and because of my economics background, we've been analyzing the supply-demand imbalances, and we are beginning to understand that they were COVID-related, not inflation-related, COVID-related, and war-related. That's not like 15 years of inflation brewing. And so this idea that, wait a minute, this is very short-term, this inflation and interest rate problem, if we are right, and if our stocks have been hurt so dramatically because of fears of inflation and interest rates, can you imagine what will happen on the other side, as not only as inflation and interest rates come down, but also as the growth associated with the innovation moving into prime time and helped by crisis, because innovation solves problems. So we get the tailwind of superior growth and the tailwind of inflation and interest rates coming down. So that is what's kept us very hopeful. And I think the evidence is accruing that this point of view will be correct.
Do you have a proverb that you like from the past in regards to the US stock market investment?
A proverb?
Yes.
That's a good one. Well, I know what my proverb is, and it is that truth will win out. That if an investor is right on how the world is going to evolve and which innovations are going to take off, then truth will win out. It will be rewarded. It may not be rewarded today or yesterday or the last 18 months because people have been so afraid. And when they move into a risk-off position, traditional asset managers tend to move back, diversify into benchmark stocks. We do the opposite. They're selling our stocks. Our stocks are not in benchmarks. So they are selling our stocks down to crazy levels. And so we will buy them. We will buy them because we believe truth will win out.
Okay. Who are some of the investment professionals that you admire?
Well, I have to give a lot.
Besides you.
No. Thank you. No. I'll start with Art Laffer. He's an economist, but he was the person who introduced me to our industry and introduced me to Capital Group, which was a research-intensive investment organization and still is. And I think that experience helped me as we were forming ARK. And then today, an economist who I think has handled this crisis very well is Nancy Lazar, who works for Piper Sandler in the United States. She has been surfacing the deflationary risks that others have not. And then in terms of an investor, I have to give credit to Ron Barron of Barron Funds, who also does not let the short term dissuade him from his long-term time horizon. So he has been a solid holder of Tesla and SpaceX because he can hold both of those. And then if I had to pick someone in the bond department, well, I know that Jeff Gundlach has had a brilliant track record over the years in bonds. And until about 1 or 2 months ago, he was a bond investor saying, watch out, we're going back into the 70s environment, sell bonds, sell stocks, sell everything. And just recently, he has shifted from that inflation stance to a deflation stance. He's worried about deflation, just like Elon Musk is, because he's now seeing it come through in his cost of goods. It's a good thing for Tesla, but if deflation becomes very broad-based, that will hurt a lot of companies.
Mm-hmm. What is your typical day like in your office?
Oh, I love my days. So I start doing research usually around 7:30 in the morning, and at 8:45 we have our morning meeting. All of the analysts and I get together. And we basically talk about all the news that has come over about overnight. Now, many people will say, well, why do you have to do that every day? You're involved in innovation that is very long term. Well, we get clues every day from companies about innovation breakthroughs or changes in strategy because of a need to pivot. So we need to pay a lot of attention to the news coming out of all kinds of companies, both private and public. And then during the week, we have research meetings where I can watch the so-called sausage being made. I can watch our modeling, both top down and bottom up. And we're having frequent meetings with companies that we own in our portfolios, and they've become more efficient because we can do Zoom now. So we meet many more companies every day and can gather more information that way. And then I think my favorite meeting with our analysts and my favorite meeting of the week is our research brainstorm. Our research brainstorm is on Fridays from 10:30 to 12:30 Friday mornings. And it is where our analysts submit to Brett Winton, our chief futurist, the most interesting or controversial ideas they've heard all week, or the biggest breakthrough in their own original research. And the reason I love this meeting on Friday is I can listen to the analysts from different, focused on different technologies, sharing ideas, and especially because artificial intelligence is going to impact every other technology. So it's just really wonderful to hear the convergence of ideas, which is turning into our convergence research now that Brett is going to be heading up. So I think that's my most exciting meeting because no one else is doing this, I think, in the investment world. And so we're surfacing ideas and insights that I think no one else is. And we invite those who are passionate about innovation to join us. And there are people, we don't broadcast it because we wouldn't want to become overwhelmed, but those people who are truly passionate about innovation and want to understand how these technologies are going to fit together, they are welcome. And I would welcome you, Hutch, if you would like to join us at any time.
Thank you. Very kind, very kind. Do you think mobile phone will eventually disappear and be replaced by some sort of virtual, screen with AR technology? Do you believe that? Or if so, when do you think something like that may happen in the future?
Yes. we have been debating this for quite a while. And when Facebook at the time produced its Quest now, I forget, maybe it was Quest back then, but there was big debate. How long will this take? And our projection was that it was going to take a long time. This was about 4 years ago, I'm going to say. We're closer now. We know some companies who are working on glasses that are attempting to integrate the technologies from a mobile phone. And so we think we're closer. And we think the software is ahead of the hardware. And we know there are still problems with the hardware. But we do think that really important, not just for a substitute for the mobile phone, but in every technology is, again, this convergence between artificial intelligence and hardware. So artificial intelligence is the new software and hardware. The two working together are going to take us to places that we can't even dream right now. We cannot understand right now. Just like we didn't understand in the early 90s what the internet would do. Who knew about Uber? Nobody even thought about it. And when it happened, really, in the like 5, 6, 7 years ago, people were surprised. So, I think the same thing is going to happen. I think there are always going to be people who will be more comfortable with a mobile phone. Old technologies stay around for a very long time, and the younger people are going to show us the way.
Okay. What is the most important thing in investing in the stock market?
What is the most important thing? I think for us today specifically is, I think innovation is under-owned. I think most traditional investors are short innovation. And the reason our clients are coming to us is they understand we are pure play innovation. This is all we do. And they know that other firms are more generalists. And so they do a little bit of innovation, but they're generalists. And so I think that as the reason we give away our research is we want investors and advisors to understand the ground is shifting underneath us. Everything is changing. Everything is changing. So genomic sequencing, adaptive robotics, energy storage, artificial intelligence, blockchain technology is going to change. All of those are going to change every sector, every industry, every company. And I don't believe that most people in the marketplace today believe that. And so it will be a surprise. And because it will be a surprise, and because we have made our name investing only in innovation, we think more people will begin to pay attention to our research and start looking for ideas in the innovation space, especially as innovation becomes very disruptive to their own portfolios.
For an ordinary investor who is just starting to invest in the US stock market, how do you recommend him, her to invest in innovation themes? How would you combine innovation stock investment with regular stock investment?
Well, I'll give you my own personal portfolio.
Yes.
But no one should pay attention to my personal portfolio. I just want to give it so that people, investors, future investors, understand how high our conviction is. My personal portfolio owns nothing but ARK funds and crypto assets. Nothing. We do have some private investments, but they're all around our innovation themes. So I don't recommend that for early investors, mostly because it is extremely volatile. However, I believe that the younger the investor, the more important it is that they put innovation in the portfolio and just leave it there. You have to make sure you have companies, investment managers who really understand innovation, but just put it in your portfolio and let those managers handle the innovation, because life is long, although I know many people say, like I do today, boy, life is so short, but life is long for young investors. And, you know, if they keep the discipline of saying, okay, I believe in this manager, I'm getting this manager's research, this manager knows what it's talking about, and just have, you know, at least for a young person, at least 10% of a portfolio in innovation. Now, I told you I have 100% of my portfolio in innovation. And why is that? Well, many people consider innovation a niche, just a very small category of investing. What we believe is the innovation around which we have centered our research and investing is going to become the major part of indexes in the next 8 to 10 years. So just to put some numbers on that, today we believe that truly disruptive innovation in the global public equity markets is valued at $8 trillion. That's less than 10% of the global public equity markets. If we are correct, that number is going from 8 trillion to more than 200 trillion in the next 8 to 10 years, and it will account for more than 60% of the global public equity markets. And so I think that 10% allocation will grow to be something quite significant in a young person's life. And young people are at a point in their lives where they can take these risks. They can take them. And I think if they do now, especially after how big a drawdown we've experienced in the last 18 months, I think they will be very pleased.
But even with someone of age of 50, he probably live up to another 50 years. So
yes,
it's not too late, is it?
And I'm older than that. I'm much older than that. And I just told you I have all of my assets in disruptive innovation, because I think this is the way the world's going to work. Now, I know in Japan, the more seasoned investors, those have been investing for a while, they tend to be very conservative with 90 to 95% of their portfolios. But then what I love about the Japanese investor who is 50 years old or older, that after they invest conservatively, they want to bet on the future. They want to bet on new technologies. And what I always say to our Japanese friends and colleagues and partners in Nikko Asset Management is that Japan's DNA is very rich with innovation. And it's out of necessity. When I think of energy, you've had to develop energy efficiency probably more quickly than any other country in the world. So your expertise in battery technology, Tesla could not have done what it has done without Panasonic and without Japan's rich history in battery technology. If you look at the genomic revolution, Professor Yamanaka at Kyoto University, pluripotent stem cells, that really was at the dawn of the age of the genomic revolution, and he won a Nobel Prize for it. When we look at blockchain technology, when China shut down the exchanges, the cryptocurrency exchanges, which countries came in and picked up the slack? Well, Japan Thailand, Korea, in Asia were some of the biggest. When I think of artificial intelligence and cloud computing, because it's all intertwined, I think back to Salesforce.com, maybe 10 years ago. Mark Benioff, who's the CEO of Salesforce, said, I don't know why, but Japan is taking up our software as a service, SaaS, faster than any other country. And so he decided to live in Japan for a while to understand that. And he used the knowledge he got from Japan to proliferate SaaS around the world. And then, of course, robotics, because of the demographic issues that Japan has, and now that many countries have around the world, Japan is at the forefront of robotics technology. So I think that investors in Japan understand that they understand innovation. They understand how important it is to solving problems, solving Japan's problems, solving the world's problems. And so while they might be conservative with 90% of their portfolio, they are willing to invest in more volatile innovation strategies, because they really do believe that they are going to change the world, the way the world works, and make it better, solve problems and make it better. So I've loved working with Japan because of this inherent DNA around innovation.
We have very limited time, but can you please share some of the innovative stocks that the Ark holds that you hold as a long-term investment? Of course.
Sure. One of the things I'd like to explain is many traditional asset managers who do not understand what we do and don't invest enough in innovation dismissed our strategy as a stay-at-home strategy because it worked so well during COVID. And I think that COVID changed the world of innovation permanently. It basically educated us that we need to digitalize around the world. We need to digitalize the world, and certainly taught us about the genomic revolution. We needed to figure out COVID-19, which we figured out in 1 month instead of 4 years, which was how long it took us to figure out the SARS virus in 1993. And then it helped us develop tests and vaccines. So innovation solves problems. And I think that the COVID crisis and the magnificent performance that innovation strategies like ours had coming out of the COVID crisis is just a precursor of what is going to happen now, because we have many more problems now. The pandemics are probably going to be more often than we would like to think. And supply chain issues are going to remain with us, right? And food and energy prices, because of the war, we've got to figure out how to solve that problem. So that's we're going to help with the genomic revolution will help us figure out how to grow food in places where we didn't think we could grow food before. And when we do grow food, to make the yields higher and require less water. So everything about innovation is about problem solving. And so the more problems we have, the more problems our companies are going to solve. So when we see Zoom dismissed as a stay-at-home stock, we say, you are wrong. Zoom is helping us with the first rip and replace cycle since the internet revolution in the early 90s. So Cisco built out the internet backbone, but it was on-premise and hardware centric. Zoom and Microsoft are going to be the two biggest beneficiaries of this rip and replace cycle, because the enterprise communication space is moving into the cloud, and Microsoft and Zoom are doing it together. And this is a $1.5 trillion global opportunity. When we hear Teladoc dismissed as a stay-at-home stock, we say, no, 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 no. Who wants to go to a doctor's office if we don't have to? Wouldn't we prefer our healthcare to be monitored digitally? And for one company to create the healthcare backbone in the United States, if not the rest of the world, with genomic data, with electronic healthcare records, all in one place, bringing artificial intelligence experts, one of whom is from Memorial Sloan Kettering, to figure out how to help individuals not only recover from disease, but prevent disease by monitoring them digitally. That is not a stay-at-home consumer telemedicine stock. This is an enterprise telemedicine stock, because corporations want their employees to stay well. They don't want them to get sick. And when we hear people dismiss Roku as a stay-at-home stock, we say, no, 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 no. This is the new operating system for television. It's for it is going to enable the shift from analog TV to digital TV, which is the great migration. And there are $170 billion of advertising around the world that needs to shift from analog to digital. And Roku and Amazon and maybe Apple are going to be, at least in the United States, but in many places around the world, the three biggest beneficiaries. And we hear a lot of confusion. I had a journalist ask me the other day, wait a minute, Roku, there's so much competition. There's Netflix, there's Disney, there's HBO. And I said, that's the point. They all need a platform to ride on, and that's Roku or Amazon or Apple. And we think Roku, because it is a pure play in this, this is all it does, is in the best position to win the lion's share of the pie. And I would be remiss if I didn't mention one of our other genomic stocks, CRISPR Therapeutics, Intellia, both of them. They are curing disease already. Since the last time I spoke with you, Hutch, we are seeing cures for beta thalassemia extend now to 2 years. The last time we talked, it was maybe 6 months, but now we have a person who used to have to go into the hospital emergency room 17 times per year for blood transfusions. He hasn't had one in 2 years. So from the last time I talked to you to now, the patients that have been cured are continuing to show us that they're cured from beta thalassemia, sickle cell disease, and now Intellia showed us ATTR, which is another very debilitating blood disease. So here again, innovation solves problems and it makes the world a better place. And I'm just so grateful that you have given me this time, especially after such a tough year for innovation, to explain to your team and to Japan how important we think this is.
Well, Kathy, thank you so much for your time. It's always educational and always exciting to hear your wisdom. Thank you so much.
Oh, thank you, Hutch. Thank you. My pleasure.
Next time, hope to see you in Japan, face to face.
We will see you in Japan. We're going to make a trip, a special trip in December. And absolutely, we want to see you and are looking forward to seeing you and meeting with you again.
Thank you. Have a good evening.
You too. Thank you. Good morning. Bye-bye.
Bye-bye.
う。